Hello everyone, welcome back to On the Ledger. This is your host Mol Sayed, and I'm back once again on your weekly rendezvous from Paris. And yes, if you haven't noticed it already, we are live in video for the first time. On the Ledger has been evolving, and we really wanted to bring you closer to the discussion. So from now on we're doing video, and I'm more dogs than ever before. For the occasion, we've got a pretty interesting discussion ahead. You've certainly heard us talk about Web3 and the whole ecosystem hundreds of times before. We've talked about the technology, its use cases, and some of the most fascinating projects of the space. But for us to be able to truly understand where things are heading, we probably need a macro overview of where things currently stand. And we're in luck because today, we've got the perfect person to give us an eagle-eye view of the macro environment. Dan Tapiero, who's a veteran of the macro trading world, is the founder and managing partner of 10T Holdings, which is a mid to late to stage growth equity fund that has invested hundreds of millions of dollars in Web3 companies such as Ledger. And it's fair to say that he has a very clear vision and approach to the space. Together with Ian Rogers, Ledger's Chief Experience Officer, they'll take us down the rabbit hole to explore Web3's present and future macro perspectives. I hope you enjoyed this discussion. Without any further ado, On the Ledger Season 2, Web3, a macro perspective on the present and future. Here we go.
Dan, welcome to the show. Thank you so much for doing this with us. Really appreciate you. Could you tell our audience, thank you. Could you tell our audience a little bit about your background and what is a macro investor for the younger people in our audience? You know, I've heard you say that there aren't many macro investors under the age of 50. What is a macro investor?
Yeah, good question. Sometimes the term morphs with macro trader or macro portfolio manager. I say macro investor because I tend to have a holding period, a longer time horizon. So, of course, the most famous macro portfolio managers, let's say, investors, you have George Soros and Stan Druckenmiller. You have Paul Tudor Jones, who's a little more shorter term. Same thing with Louis Bacon. These are the guys who sort of grew up in the 80s and 90s, probably, all of them in their mid 60s or so, who bet on structural changes in the world. And oftentimes macro trading is associated with, crises. The ERM crisis in 92, 93, the Asian crisis in 97, 98, or, maybe bubble bursting. They're big trends, big structural macros, we call them even macroeconomic / geopolitical trends that they see coming in the future. And they make investments based on the expectation that those things are going to play out. And I do something a little different in the sense that I've been a portfolio manager, but I've also been an entrepreneur and started now 3 businesses basically from scratch that were based on macro ideas and that actually were played in my portfolio, but then also played through the starting of a business. And so,
how did you find your way into it? What was the start of this for you?
Well, in the early 90s, basically right out of school, my first real job, I had a little bit of a they call it sort of quasi internship beforehand, but my first real job was at a place called Tiger Management and working for Julian Robertson in the macro group. And there were 2 senior guys there who kind of, showed me the ropes, and I learned a ton from them and from Julian. And, that probably was the most, formative but most important experience for me in my career, because I saw how one develops a thesis, how one executes on it, positions in the marketplace, and then holds a position for, let's say, a medium-term holding period, which can be anything from sort of 6 to 12 months and more. And so seeing Julian operate and seeing the risk appetite that he had and the conviction that he had in his investments, frankly, was priceless. So how did I get into it? I was a history major. I went to Brown. I studied European 19th century history. I did a BA and MA, and it's very similar to studying history is very similar to the investment process. You read 50 things and then you come up with a thesis that maybe hasn't been come up with before, and then you write it down. And if you can't express it clearly, then it's worthless. And so, I went to a high school also that was super focused on writing and English. And, by the time I got to Brown, I was already in a place where I had pretty decent command of, I would say writing and writing skills. In fact, I was an editor on the Brown Daily Herald, which is the daily newspaper of Brown, which in the end ended up being very helpful because it forced me to learn how to be very concise with my words in expressing an idea, sort of like preparation in a way for Twitter, early preparation for Twitter.
What's interesting, and this is a really unexpected answer for me. So on some level, what you're telling me is a macro investor is a story investor, because you're looking for these big changes in the world, and building a thesis around that, writing that thesis down, and then investing against that thesis and sticking with that story. But I assume there's also then storytelling, because you got to tell that story to your colleagues, to investors, et cetera, right?
I mean, for my entire career, and again, I retired from that world in 2012, the macro money management world, but there was only one person you had to convince. So that was the guy I was working with at that time. And there were, 3 or 4 guys who I worked for who were, I would say sort of similar caliber to Julian. And that was really the only guy you had to convince. So
I relate to that.
Yeah.
I relate to that. Part of the reason I went to LVMH was, and I said this at the time, because there's a guy.
Yeah.
Working with Jimmy, what Jimmy Iovine, what I learned is, when there's a guy, it can cut both ways. Because if you can convince him, then anything's possible.
Right.
If you can't convince him, or if he thinks you're a bozo, then you're dead. But I really liked, and I still feel that way about working with both Jimmy and Ben. I don't know. I like it when there's one person, and you can kind of you can get that across the line. What in those 3 companies that you set up? What was your macro thesis with each?
Oh, well, I mean, that's
and I assume the third is 10T.
Yeah, 10T is one of them, but that's a much longer story. I mean, the bottom line is the first one is in 2006. I was very bullish on agriculture. Was working for Stan Druckenmiller at the time at Duquesne. I think we probably had one of the largest positions in the world in wheat, corn, soy futures. I'd written up with my analyst team, as I still do today, a 50-page investment memo about the coming bull market in ag. And that sort of supported our investment in the portfolio. And then, Stan loved the idea, and he came to me and said, look, how else can we express this view? And I came up with this idea that farmland prices in certain parts of the U.S. for certain crops could double in the coming 5 years. Again, wrote the investment thesis, brought on some partners, and we executed that. We started a company called AgCoa, which by 2013 had become the largest private farmland REIT in the U.S. We ended up selling that to the Canadian Pension Fund System, CPP, for $450 million. And then actually, funnily enough, last year, the Canadians sold that REIT to Bill Gates, I don't know if you remember reading that Bill Gates has become the largest landowner in the U.S. I think our farms, AgCoa, certainly well over 100,000 acres by now, pushed him over the edge. I think he paid $1 billion for those. So that was one, the first time I sort of took a macro idea that was in the portfolio and expressed it through launching a business from scratch, zero. And then I did it again in 2008, 2009, launched a company called GBI, Gold Bullion International. And that company sells and stores physical gold, silver, platinum, palladium in vaults outside of the banking system. At the time, I was nervous about a banking collapse. I didn't want to store my physical bars in a bank because I thought like it's a hedge really for if the bank collapses. Why would I hold it in the bank? And I couldn't find really a good way to do it, a legitimate sort of blue chip firms. There weren't any out there who had storage outside of the banks. And so we founded GBI, and today my co-founder partner is still the CEO. We're the third largest vaulter of gold in the world outside of the banking system. I sit on the board, still own a pretty decent chunk of the company. It's done over 1 million trades now for over 400,000 clients. And it was actually through that company in 2014 that I was introduced to Bitcoin, because GBI integrated with a firm called BitReserve, which today is the Uphold wallet. And we were the first place that you could buy and sell gold to buy and sell Bitcoin or Ripple. And so, again, frankly, Bitcoin at the time was only a $10 billion asset. And I was a macro guy and, used to trading sort of bigger markets. And I never did the work, and I just didn't focus on it stupidly. And frankly, it wasn't until 2018-19, after the Bitcoin / Ethereum collapse, that I got super interested in the space. I mean, I had seen that play out in the traditional markets many times. When you have a bubble and then you have an 85-90% sell-off, that for the most part, that means the asset's going to zero, or it's the buying opportunity for, a massive move up. And so I started buying in my own entity, which I've had since 2003, called DTAP Capital, bought Bitcoin and Ethereum, and then, spent 6 months, going down the rabbit hole, 10 hours a day. And I finally figured out why Bitcoin was so important to the world. And, that it was truly an invention. I always say an invention as important as the invention of the combustion engine, something as important as the discovery of electricity. So at the time, I didn't quite get that in 2014. After falling down the rabbit hole, I got that. I positioned my own entity. And then I just, started to think, how else can I get exposure to this idea? Is there a business? Is there a fund that I can set up? And then 10T Holdings, which you mentioned, is a mid to late stage private equity fund that I launched. Well, the idea was launched in the middle of 19. We were going to launch April of 20, but then COVID hit, and, we were way late for 4 or 5 months and only ended up launching in December of 20, January 21. But that company was the first fund, as far as I know, to exclusively and only invest in mid to late stage companies in the digital asset ecosystem. And those are companies broadly with a market valuation of over $500 million. They've already achieved sort of product market fit. They have their niche. I'm not a venture capitalist. I'm not a technologist. I wanted to build a diversified portfolio that would be leveraged to growth in the overall digital asset ecosystem. So at the time in 19, the value of the DAE was only $300 billion. And I said, if this thing goes up 30x, from 300 billion to, let's say, 10 trillion, I want to build a portfolio that's going to go up, 5 to 10 times, based on that growth. And frankly, I did something that I think was more bold than any fund manager, frankly, has ever done that I'm aware of. I put that view, which is a call for a 30 times appreciation, into the name of my fund. It's a pretty bold statement. 10T in 10 years is sort of our mantra. Anyway, so that 10T stands for 10 trillion. And so, of course, as you know, Ledger, your company, is frankly our largest investment to date. We've made 18 investments, 13 of them with a valuation of over $1 billion. The other one's over 500 million. And thankfully, we have not paid more than 10 to 12 times revenue on any of the businesses. We've been very careful. We want to be long-term partners. In some cases, I have a board seat, like with your company. In other cases, we don't. But I'm not looking for a quick, move here. A lot of the private equity guys, they're always thinking about exits before they enter. we want to hold our positions in the portfolio. So I know I went on
I'm
a bit there. Sorry, I went on.
Yeah, that was great.
Yeah.
I'm going to come back to 10T as well, and I'm glad that you disclosed that you are an investor in Ledger, and I wanted to make that connection because I think it's incredible that you went from self custody of gold to self custody of Bitcoin effectively.
Yeah,
that move makes perfect sense to me. And also, yeah, I know exactly what you mean. About where your head was in 2014, compared to where it was a couple years later. But I wanted to ask you is, one, your kind of process of falling down that rabbit hole. What were the things that you found convincing? And then what did your macro perspective bring to that? That maybe somebody who was, just reading that same material, but didn't have the background that you have and what they might've seen in it.
Yeah, I'll tell you the truth of the matter is, I don't think in 2014, I beat myself up about that for not focusing on the space more, but there really wasn't the academic or intellectual literature, I would say. And again, I came a little bit from an academic background and, reading and coming up with theses. And, every time I would try to read the white paper, I would stop, I'd give up. Proof of work algorithm wasn't any language that I understood. I didn't understand or even know much about cryptography, or I have zero coding experience. I'm not a mathematician or a scientist. I just didn't know any of it. And so I needed it explained to me in English. And maybe there was some work out there at the time, but it was hard to find. By 2018, there was a lot more out there. And, there were some key books that I read that just crystallized things for me. Safadine Amos's book, The Bitcoin Standard. He puts the whole thing in a macro context. I don't agree with absolutely everything that's in there, but there are some phenomenal pages and phenomenal chapters in there. Also, Antonopoulos' book, The Internet of Money, Volume 2, for me, was really just an eye-opener. He's just phenomenal. Watch him. I probably watched 20 of his podcasts. He's probably one of the guys that's done more to bring people into the space than anyone in the world. Anything by him, and he's written books on Ethereum too, which is, again, another sort of level of complexity. Those two. And then Jan Pritzker's book, Inventing Bitcoin, 100-page book, which I give to everybody. I probably handed out about 100 of them. They're little thin books, but for the layman, they sort of take you through the mechanism, the functioning, the engineering genius that is the Bitcoin network and how it functions. And for me, I really need to get down to sort of brass tacks on something to really believe it and have conviction. And then when I do, I like to, position in a significant way, sort of as I did with Ledger and with some of our other companies, and of course in Bitcoin and Ethereum, which I got very aggressive in Q1 and Q2 19. So those three
how do you
things
think
were
about
really,
those?
I'm sorry.
We'll turn to 10T in the fund in a second, but you've said that I've heard you say you're not a trader, and so you're not in and out of these assets. I can
trade. I sat next to Steve Cohen for almost 5 years. On and off. I definitely can trade if I need to, but I do not think that is the best way to build wealth in this space. This is the most difficult space to trade of any market I've ever seen. I would not trade this unless I had a team of 10 guys watching everything, every moment. And, even then, I'm not sure that it's the best way to build wealth. I really think holding an asset in the space, whether it's Bitcoin or Ethereum or whether it's Ledger, over a 5 to 7 year period is going to net you the best return. I just want to say it's very hard for people to believe, HODL, HODL. It's very hard for people to believe that all I have to do is just buy this and wait. Sitting on your hands and being patient is like a superpower in a way. And people don't understand this because people's emotions get involved a lot. And the minute you let emotions sink into your decision-making process, you're dead. You're absolutely dead. You're going to lose money. And so this dollar cost averaging, buying Bitcoin, once a quarter with your savings or every month or whatever it is. And then, of course, having it in cold storage, holding it on a ledger is extremely important when you get beyond a certain value. I think if you're holding a few $100s of Bitcoin, it's okay. But once you get into tens of thousands of dollars and, of course, millions, you must have it held on a ledger. And of course, you have a few choices there with different nanos, etc. So,
I'm curious how you think about. I promise I'll move on from this, but I'm just so I feel personally eager for kind of the macro investor take on this entire space.
Yeah.
And you've mentioned Bitcoin and Ethereum, and I'm curious how do you differentiate those two in your head? And then what do you think of, coins and chains beyond Ethereum?
Yeah, I mean, look, I think those are the core assets. They have network effect. They have history. They're not going anywhere. They can go up and go down and they'll have volatility. But those are really core assets to the ecosystem. To me, everything else is a venture project. I don't really have the skill set to take apart the code and understand necessarily why one is going to be better than the other. I can understand it, in a way, but I don't really have the confidence to bet on early stage projects or pre-seed protocols. There are a lot of guys out there, Andreessen and Polychain and Parify, Paradigm. They do this for a living. This is their bread and butter. I have no interest in competing with them. So I don't, there's an entire universe out there also of NFTs, which have become very big. I think that, funnily enough, we invested $20 million into Yuga Labs. I just finished with my analyst this very long, 70-page investment memo about why we invested in Yuga. And I see there's tremendous value there in these Bored Apes. And I really sort of dug deep there. And I think I understand that, in quotes, I'll take asset. I understand that there's a possibility that it might not be around, but I doubt it. I really think that it's achieved, network effect and a certain status in place that it's not going anywhere. In fact, the upside could be tremendous. And I sort of think of this, when you say like my macro, where does my macro come in? So like as a perfect example to explain Bored Ape, like how can you as a macro investor, now again, I wrote extensively about this and it's hard to get into it without super detail, but I would just say, I think that there is a possibility that Bored Ape is the equivalent of Mickey Mouse in 1922. So I think that there's a possibility that for this new generation that, Mickey Mouse and Donald Duck does not really appeal to 15-year-olds today or 10-year-olds or whatever it is. But Bored Ape and some of the other characters that, Meebits and some of these other characters that Yuga will be involving in their metaverse, I think I kind of see it as potentially like this new generation's characters, that they have different personalities, they have different things they're interested in. And again, if I'm even like 1/10 correct about that, Yuga as a entity can go from 4 billion to 40 billion in terms of, what it's worth. I think very few people are thinking about it within that context. But I really think it's possible after all the work we've done.
That was the question I was going to ask you. I want to make one observation first. I was thinking as you were talking how fitting it would be if Yuga was Disney. there was Disney, of course, and theme parks, and from Fantasia to Sleeping Beauty. The Disney of the 90s and the early 2000s was owned by Steve Jobs, which in some ways makes perfect sense. I'm always interested in this connectivity between technology and culture, because I think we deny it often, but it's always lurking there under the surface. So the fact that the next one would be related to digital assets makes perfect sense to me.
Yeah, but I would also say one more thing, and that is that the in the population of people under the age of 25, I read some study recently that they spend 8 hours a day online in some form or another. And, they, a big part of their lives, it's like half their life, you sleep for 8 hours and then, there's only 16 left. I mean, so they're spending half their life and, they really are living online. It really makes sense that they're going to be living in these metaverses, that they're very comfortable living on it. You and I might think it's like stressful. You might prefer to go out for a long walk or something. They don't really think that way. And so, the probability, and again, everything is probabilities, but the probability that generation is living their life in a metaverse somewhere is very high. And we've already seen that, Yuga has been able to capture the attention and really is touching the zeitgeist somehow with their characters and their expression of those characters against all odds. I mean, really, it's the fastest growing company. This company did not exist 1 year ago. And then they just raised it a $4 billion valuation. They're doing hundreds of millions in revenue, 95% margin or whatever it is. So I think that's another thing, is that guys like us aren't used to the pace, the speed, the exponential growth rate. It's hard to compute. It's very hard.
Yeah, and I think you're right that I see the same thing. I mean, I'm turning 50 this year, and so I feel at the same time I've been on the internet since 1990, so I feel like I put my time in on this internet. But and I'm unfortunately over that 8 hours as well, and I see that same thing, that I'm living in this borderless world that the three of us are in together right now. I assume you're in New York, Dan, but I'm probably wrong.
No, I'm in Dorado Beach.
There you
Puerto
go.
Rico. Yeah, can't you see the sun behind me? It's 82 degrees.
Yeah, so you're in Puerto Rico, and I had no idea where you were, and it was irrelevant. And that's the point, is that, I think Meta's definition of metaverse is people who are not in the same physical space together collaborating. It's a very simple thing. We spend our lives doing it. And of course, that world is going to have its own culture, which is what Bored Apes are. Of course, that world is going to have its own economy, which is what Bored Apes, not as well as Ethereum, Bitcoin, and on are. Let me ask you this: Ian, moving to 10T.
Yeah, I just wanted to put in a point here, because I think part of the reason that we invested in Ledger and why I think the company is a phenomenal company for the future is because the Bored Ape is the perfect example. 1 year ago, there were no Bored Apes. There was zero value. And out of thin air, you have hundreds of millions of dollars, and maybe it's now billions, of value that has been created that people have, I think, put a really formal stamp on. And once that value goes beyond a certain number, that Bored Ape, that one NFT is worth over $400,000 or $500,000. You must put it on a ledger. And everyone in the space realizes this. Ledger, to me, own the vaults in cyberspace. And so all the value that is going to accrue into the digital asset ecosystem over the next 5 to 10 years, as we move from 300 billion to 3 trillion to 30 trillion, the value that will be held on Ledger will increase with the value in the digital asset ecosystem. And so I don't really know of a company that is as leveraged and as cleanly and directly as leveraged to that growth as Ledger. So I just wanted to make that clear, because That's the reason, not the only, but that was a very primary reason why we invested as much as we did in the company.
Well, I really appreciate that. And I feel the same thing. I texted you after the last board meeting, which is, I love your conviction.
But when you do the work, you can have conviction. And when you don't do the work, you can't, you wobble around, you take a small position, this and that. It's a painful process. It's like a birthing process every single time, you like develop that conviction, but it's very gratifying also.
Well, and to your point, we see that Ledger over-indexes in these communities like Bored Apes, like CryptoPunks, et cetera, because they're communities. First of all, right? It's a relatively small group of people. The value has gone up tremendously, so there's a lot of people trying to get Mo's ape, and then somebody does end up getting wrecked and losing their value, and then the whole community says, "Wait, what should we do differently?" And the answer to that question is get a ledger. So we definitely over-index in communities of value. There seems to be a direct correlation between asset value and number of ledgers inside of a community, which isn't particularly surprising. I mean, we have far fewer in the BFF community today, as an example, than we do in the Bored Apes community, and that makes sense, relative to kind of newness of the customer, education of the customer, asset value, et cetera. But let me ask you then, on 10T, how many funds have you done now?
I'm sorry, how many what?
Funds?
Oh, we have 3. This is my third one is going to close at the end of the month, May 31.
Congratulations. Let me ask just the kind of the basic question, and which is, what made you decide to invest in this particular way as opposed to, getting, exposure to the space through other ways? One way is just, buying and holding Bitcoin and Ethereum and then hanging on and waiting, like you said. Why is there, a good bet in investing in these companies of this particular size?
Yeah, I mean, I think that you need to have a bunch of different exposures. I do, not in the fund, but I do have Bitcoin and Ethereum, and I think that should be a part of everyone's portfolio. I think that for the larger investors, many of our investors, we also have small investors, but I think, you should have, call it 5 to 10% in Bitcoin and Ethereum. You decide. I think you need to have, some VC fund exposure. And then I think, you need exposure to these bigger companies that are, dominant today, that are going to be around in 5, 6, 7 years. It's a different risk reward profile. I'm trying to make a 5 to 10x on the portfolio. You have VC funds that are making 20, 30, 40, 50x. They make 10 investments, 9 go to 0, and 1 ends up being Google. That's a valid investment framework. It's just not one that I'm comfortable with. As a macro investor, and this goes to your first question, I like betting on a sector. I don't like having any companies going to 0. I want to know that if I have a portfolio, I go to sleep and I wake up 5, 6, 7 years later, that portfolio will increase in value if all of my macro assumptions held true, have happened, i.e. the DAE, digital asset ecosystem, becomes as prominent in our lives as I expect it to be. And so for me, it was very similar framework of investing as Agcoa, my farmland REIT. That was a broad diversified exposure to different types of farms that we thought would appreciate given the bull market in the underlying grain markets. And so it's a very similar thing. I expect a bull market. I think Bitcoin can head up to 300, 400, 500,000 within the next sort of 5 years. I've been saying that since 19. And I think Ethereum could certainly head up to about 10,000. I mean, I know that there are, issues now. There are other layer ones popping up. And, there was a bit of a gas fiasco this weekend. But, I think all those things are going to be solved. And I don't think Ethereum is like some of these other projects, as I said. I do think it's core to the ecosystem now. But I think as an investor, you need to spread out your exposures. And this is just the kind of exposure I like the best for myself and for my investors. And, it's just consistent what I've done done throughout my career.
My sense is that this is, just not at all a Silicon Valley game, which is the game I was involved in the first 20 years of my career. That it's, much more global. Do you feel that as an investor? Or am I sensing that correctly?
Yeah, I mean, if you just look at even the geographic distribution of your clients at Ledger, I think that in large part that reflects what this is, which is this is not a U.S. bet. 90% of total world cryptocurrency volume is outside of the U.S. The largest single entity, so Binance, that we all know, has 65% of total crypto volume, and almost all of that is outside of the U.S. I mean, I'm excluding Binance U.S., of course. So I think that this truly is the first global macro bet of all time. I mean, I used to trade currencies. There were really only 20 global currencies that were tradable. And today, certainly a lot more than 20 cryptocurrencies, but more importantly, there's a person in every country in the world, up and down the socioeconomic strata, holding $1 of Bitcoin, holding hundreds of millions of dollars of Bitcoin or Ethereum or whatever. There's never been such a distributed bet, such a decentralized network. I think that in terms of the investments in our fund, we like to split it up. Basically, a perfect world would be 30-30-30, which is, between US, Europe, and Asia, and then 10 sort of other. But we are finding outside of the US, the multiples are much more reasonable than inside the US. There are many US investors who, they're not really that comfortable with the space. So for them to go to Korea or France or whatever, it's just another step that's difficult. And so, that's great for us for the moment. I think, as I said, it'll change. But it truly is a global bet.
And what does that make you think about the U.S.? I mean, I've heard you speak about regulation in the U.S., but I think when I heard you speak about it, it was before Janet Yellen's latest comments, which seemed, more positive and to point to the fact that, innovation comes from the private sector, and there are some problems in the banking system. How are you feeling standing here today about regulation in the U.S.?
Yeah, I think you're absolutely right. I think people were super nervous up until recently that the U.S. would do something that would inhibit, growth. And look, this is probably the first time that the U.S. is not leading technological and financial innovation. I mean, first time, at least in my lifetime. I mean, in the 80s, it was all U.S. The only ones innovating in the financial realm. I mean, mortgage-backed securities were invented at Salomon Brothers, basically. Technological innovation. I mean, obviously the great tech companies, the early ones, Microsoft, Apple, these are all U.S. companies. And so, you take a look at, like, for instance, the leader in the space out and by far is Binance. There's no single company that's even close. And that's not an American company. The single most important company in the options space, is a company called Deribit, which is a Dutch company. They have 95% market share in all Bitcoin and Ethereum options. I mean, I've never heard of anything so dominant in any
Dutch
market.
Are making a comeback.
What's that?
The Dutch are making a comeback.
Yeah,
they invented this. Come on,
right? I mean,
1600s.
Well, that's exactly right. And John, who founded that company, was on the Amsterdam Exchange as an options market maker early in his career. Really, I've been surprised that some of the other exchanges, even Binance, have not really, moved into the options realm. It's a specific skill. It's very hard to manage. Anyway, my only point is, we have another Dutch company, Bitfury, which we think is a fantastic company that's got great growth prospects. I do think coming from, you asked me, like, what is the global macro investor background? That's been very helpful. I've never been an American investor. I've always searched around the world for sort of the greatest risk reward opportunities, where you have a real asymmetry. And I also think, look, it's just the nature of things. I want to just answer your question about U.S. regulation, because I think what I've said is that, frankly, people here are so obsessed in the U.S. with, the U.S. and what, the government here is going to do. Can they ban it? Again, I don't think it's really about just the U.S. I know other people follow the U.S., but a lot of people are not. I mean, Singapore, Zug in Switzerland, you have Puerto Rico. These places are becoming hubs for crypto that are, and Portugal even laying down frameworks that are very positive. They see it as an innovative technology that, can certainly raise the living standards, create enormous jobs. I don't think there's any area in the world now that is more short of people than our space. I mean, every company is out there hiring tens or hundreds, thousands of people. I mean, look, this is not some like fly-by-night Ponzi thing or nefarious thing. And I think last summer, people were worried after listening to the debate in the U.S. legislatures that they might do something silly, and just like the Chinese did. I don't think I've seen such a policy blunder, macro policy blunder in my whole, career. They banned Bitcoin. They banned Bitcoin mining. I understand they have fear of free markets. They have fear of decentralization. They want to control things, the Communist Party there. But I mean, I don't know of a more legacy intellectual framework than that. And I think they're doing themselves a huge, injustice, misjustice.
I'm going to let you go in a second. I have two more questions for you. And one is, I wanted to touch on what you just mentioned, which is that generational divide. I really feel it. I went to the wedding of a son of a friend back in October, and all of my friends who are my age were like, Ian's a nerd. He's always been a nerd. He's always going to be a nerd. The groomsmen were like, wait, you work at Ledger?
Yeah.
Dude, This guy, he works at Ledger. That's so cool. So I just, that generational gap that line is so bright. And I think we know why. And my question is, like, for you, why, like, what is it about you, do you think, Dan, that has pulled you into this? And why are you not one of the people that is saying, I don't get it, I don't want to think about it?
I mean, it's almost very easy. It's the greatest global macro trade / investment of all time. For me, it was just an easy thing once I understood how important Bitcoin was, the white paper as an invention, that it was, when I'd never heard, of course, of this Byzantine generals problem. I'm an investor, not a cryptographer or mathematician, that this was a problem that, like, people couldn't solve for hundreds of years. And all of a sudden, in this 8-page anonymous white paper, you solve the problem of distributed trust. I'm like, wow, okay, that is a big, big deal. And then I delved into that, and I thought, wow, this really is much bigger than anyone is understanding. And I guess as a macro guy, the funny thing is I always was looking within the existing structure for structural shifts. I was not ever sort of looking outside of the existing, monetary and fiscal structure, outside of today's world. But I do feel like it's like 1911 and, we're making cars here, and the naysayers are, on horseback saying, that car thing is just going to go away. It kills too many people on the road. It's never going to get, it's never going to get enough people. The roads are never going to be built, or whatever it is. And so It really feels like that. And I've never participated, or in my life, I've never been part of that big a shift. And so on the one hand, my background was helpful in seeing it, but also, I was slow to it because I was sort of mired in the old world for so long.
Yeah. I feel the same way. I remember the people that told me this internet thing, everyone's never going to have broadband. And then 10 years later, everyone's never going to have a smartphone. Last question. What keeps you up at night? What are you worried about? Where does this go wrong? Where are the pitfalls?
Well, look, obviously there are a huge number of things that can go wrong. My sort of assessment, when I line all of the possible negatives up versus all of the possible positives, is that the risk reward, the probability that all the things that go wrong is really going to damage the future is not that high. What can go wrong? You could have a massive hack again, in theory. I don't think you can on the Bitcoin network, but maybe, we've been seeing hacks in DeFi every other weekend. And, the system is super robust. If you want to trust a network that's going to pay you 25%, understand that there's risk there. Look, the volatility, it's an early stage asset, the whole space. The volatility can be, astonishing. And it's possible that, it takes longer to get to where we need to because, so many people, just get, discouraged. Again, only 2% of the 2 to 3% of the world have crypto accounts or crypto wallets, right? Sort of like 1997 in terms of the internet, right? So I think it's still early and there's such a tremendous asymmetry that rather than listing, possible things that might come from left field, I think it's a pretty good probability bet that this is the future.
That's a great way to end it. Thank you so much, Dan. Thanks for coming on and doing this with us. Sure. I really, really appreciate your time.
Yeah, my pleasure.
That's it. That was a pretty fascinating conversation. I think it truly provided us with a few essential mental models through which we could perceive the Web3 space. If you enjoy what we do, please hit that subscribe button and help us help you get more of it. This was On The Ledger from Paris with your host Mol Sayed. Till next time, take care. Au revoir. This content is provided for informational purposes only and is the sole expression of our opinion and should not be relied upon as legal, business, investment, or tax advice. Do your own research. Any loss or profit is your sole responsibility. Stay safe.